Hi, this is Mike Palm with Group 1 Trading. This is Volatility 411. Today we have the S&P 500 up about 36 points, and accordingly we're seeing the VIX pull back somewhat significantly here. The front month future, that's September, that expires September 18th, that's trading about 1840 with the VIX itself at 1760. So we've entered into a pretty normal contango world where we're seeing VIX futures, generally speaking, more expensive over time, and things have pulled back into what would be a normal state. We were in a abnormal state called backwardation, where the front month futures trade over the back month futures. That existed for a while because we had big sell-offs related to the China tariff situation. Now we entered into this normal state of contango. What typical trades that we see is people like to sell at the money options in the VIX. That's high vol options that will decay, but they still like to have some protection in buying an upside option, perhaps two of them. And today we saw that exact trade. We saw a big seller of the September 1823 1x2. They sold it at 30 cents. They sold the 18 calls to buy two of the 23 calls. That means the break-evens on that trade are 1830 and 2770. The idea there being is that they want to be short the 18s, they collect some decay there, but they own two of the 23s. So should the VIX pop through 2770, that trade would be a winner on that side of the trade as well. So they have a chance to make 30 cents. They have some protection in the meantime if they want to get out of the position later. And it makes a lot of sense if we're going to remain in a market that stays pretty quiet. Of course, if we have a tweet, something going on over the weekend, you name it, and we see a big sell-off in the market, that might be a different situation there. They do have those two options. A dramatic move down in the market, that position would be a big winner. But if we only have a modest move down, they have to really reprice that options in that whole situation entirely. So that's what's going on in the VIX. It's going back to a normal market now that we've seen a big rally after the sell-offs we've had in the previous 2 weeks. And while the VIX is still at 18, is elevated, it's definitely moving higher than we would expect. All right, this is what's going on in the VIX. Mike Palmer with Group 1 Trading.